Hey there, happy holidays and all that. I guess I should make a video. YouTube doesn't like it when the creators don't make videos regularly, so here I am. I've been trading this IV slope system that I summarized in a couple previous videos for about 3 weeks now. So I thought I'd give you an update on how it's doing. And actually, I'll give you a spreadsheet, links in the description, where you can track my performance. So here's first a review of what the system is. So if you plot the IV of an option versus days to expiration, you can get a quote IV futures curve. So I average the IV over 20 to 80 delta calls to make this plot, and to make this plot, I actually also averaged over 1 year of data. So this is a 1 year average IV futures curve for the SPY. So if you plot the daily futures curve for the SPY over a year, notice that the IV is usually lower for the shorter dated options. There's more curves kind of where it's pointed downward to the left. So this means the IV futures curve is in contango. So when there's market stress, the IV futures curve flips into backwardation, where the shorter dated IV is larger than the longer dated. So here's the IV futures curve for a single day, a day when the curve was in contango. Here's another day where the IV futures curve was in backwardation. Notice that the IV for all expirations rose across the board relative to the previous plot. So I compute an attribute called IV slope. For SPY, it's simply the IV at 50 days expiration minus the IV at 10 days expiration. That would vary depending on the underlying. It's up to you how you choose to compute it. I have a calculation actually that helped me choose an optimal cutoff that separates what I define as contango from what I define as backwardation. So in this case, for the SPY at this time, that cutoff is 0.012. So the IV slope above the cutoff is in contango. IV slope below the cutoff is in backwardation. And you can tell that, typically the most common state for the SPY in the last year has been in contango. So here I plot the daily IV slope of the versus the stock price of the SPY for the last year. So you notice that the IV slope is usually in contango, so it's usually above that blue dotted line. And when it's in backwardation, the market is typically falling or trading sideways, and volatility tends to be higher. So that kind of gives you an indication that this IV slope might be a good signal to tell you when the market is bullish or bearish. So here's a histogram of the SPY daily returns from days when the IV slope was in contango. We have an expected value of 84 cents. That's fantastic. So on average, on these days, the SPY will rise by 84 cents. And the outliers are mostly to the upside. The standard deviation is $2.14. So this is a good time to be long. So here's a histogram of daily SPY price changes when the IV slope was in backwardation. And first you can tell there's fewer occurrences because the SPY has just been rising relentlessly this year. So the expected return is actually negative $1.17 with a huge standard deviation of $4.50. Okay, so when the IV slope is below that magic 0.012 number, the returns are very volatile and they're skewed to the downside. So this is a bad time to be long. So here's the daily SPY returns, but they're color coded to whether the IV slope is in contango, which is yellow, versus in backwardation, which is blue. So you notice how when the curve is blue, so when the IV slope is in backwardation, that the returns tend to be highly volatile, in addition to being biased to the downside. So if you integrate each of those curves in time, then you get a cumulative return broken out for whether the IV slope was in contango, which is yellow, or in backwardation, which is blue. I've also plotted the actual SPY daily price in green. So the results here are pretty clear. There's a huge advantage to not being long SPY when this IV slope is outside, is in backwardation. So at least in this back test. So if the regime, the market regime changes, this kind of the training for the back test might not apply. But as long as the market kind of continues in the current regime, it's likely to be a useful signal. So anyway, I'm tracking the results of trading this strategy on 9 underlines that I've selected. This sheet is for the SPY. So I started on December 7th, 2021, and I've been trading it for about 3 weeks now. So the graph shows whether trading this strategy provides you with an edge. The blue curve in the graph is the cumulative return when the system tells me to be in the market. The orange curve is a cumulative return of the underlying, and the red curve is the cumulative return when the system tells me to be out of the market. Okay, so if the blue curve is above the other two, then it means the system is providing me with an edge. So I track a summary of performance over 9 underlines, and I list them here. I mainly selected these underlines based on liquidity. These are highly liquid options, since I'm using the options market to not so much to trade, but actually to kind of predict market behavior. I need option prices and option volatilities to be meaningful and updated frequently. So I'm making this spreadsheet publicly available for now at least, and you can find a link to that spreadsheet in the description. So I'm going to track performance daily, and you can track it too. So nothing to hide. It's all there. So obviously, if the blue curve is higher than the red curve, it means that the system is working. Of course, I've got the SPY portfolio basically consists of taking that starting value and buying shares of SPY. When I trade my system, in some cases I'm using long options, leaps, like for the SPY, because I can get more leverage that way. But for some of the other underlines, the ones that aren't quite as liquid as SPY, I actually will buy shares instead. So anyway, that's that. And let me know in the comments what you think. And as time goes on, you can track my portfolio, and if I'm doing badly, you can make fun of me in the comments. It's all about transparency. See you later.